Hi, today we're going to have a look at the 2012 Leaving Cert Higher Level Cash Budget question. So first of all, we're asked to prepare a cash budget for the 6 months, July to December. So to do that, we need to work out our receipts and our payments. So firstly, we'll start off with our receipts. In the question, it says that 40% of our customers are for cash and 60% are for credit, making up our total customers. Of the 60% that are on credit, 50% pay 1 month after, and the remainder, the other 50% of the credit customers, will pay the second month after. The cash customers, who are the 40%, they receive a discount of 5% if they pay in cash. So if we look at the first month, for example, here in July, sales were 520,000. So if July sales were 520,000, 40% of those were for cash. So I'm going to get that money in straight away. So I multiply by 40% because I'm going to get that in. They're the cash customers. And because we're offering them a discount of 5% if they pay in cash, they're only paying 95%. So it'll be 520 by 40% by 95%. And I will receive that in July because it's cash. In 1 month later then, again, I'm starting off with my total sales of 520. I'm going to multiply that by 60% because the credit customers are 60%. And of those people paying on credit, half of those, 50% of them pay in 1 month, and the remainder, which will be the other half, pay in 2 months. So these figures will be the same because that's 50%. If 70% paid 1 month after and the remainder paying 2 months after, then that would be 70 and 30. But in this question, it's 50 and 50, which makes it easier. These two figures will be the same. And I just need to do that each month. In August, my sales are 540. So again, by 40% by 95%, and by 60 by 50, and by 60 by 50. So to fill this in, to start off with here in July, these two columns are going to be filled in or blank. Why? Because in the question, it says that the company is only planning to set up on the 1st of July. So if it's only planning to set up on the 1st of July, I wouldn't be owed any money from 1 month previous, which is June, or 2 months previous, which is May. In August, I wouldn't be owed any money from 2 months previous, which was June, but I will be owed money from 1 month previous, which is July. So this won't be filled in. So in July, if I go back to my workings in July, I'm going to receive 197,600 in July. Then in August, I'm going to receive 156 in 1 month, and in September, another 156. In August, for the cash, I'm going to get 202, 205, 200. And again, in 1 month from August and September, I'm going to get 162. And the remaining people are going to pay it 2 months later, which again is 162. In September, my cash amount is 231,800. My credit 1 month, 183. And credit 2 months, 183. In October, for cash, I'm going to get in 239,400 straight away. In November, I'm going to get in 189. And in December, I'm going to get in 189. For November, cash straight away, I am going to get in 243,200. 1 month later in December, I'm going to get in 192. And I don't need to work out January because we're only doing up as far as December. And for December, I only need to work out the cash amount that I get in straight away, 250,800. I obviously don't need to do January or February, the 1 month or 2 months, because we're not asked to do January, February. So now I'm just going to add these down each month. So 197,600 plus 0 is 197,600. Again, just going to add those across the whole way, and then I'm going to add my cash sales. I'm going to total my credit sales 1 month, and I'm going to total my credit sales 2 months. So in total, 294,000 is what I plan to get in receipts for the 6 months. On to purchases next. what is the story of purchases? The purchases, whatever we purchase, will be paid for 50% in the month after purchase. So we're paying for half of the month later. But if we pay a month later, we're going to get a 2% discount. And the remaining purchases, the other 50%, will be paid for in the second month after sale. So for workings for this, so in July, I'm not going to pay for anything in July. I'm going to pay for a month later, which will be August, and I get a discount, and the other remainder will be September. So again, with the workings, purchases for July. So purchases for July are 220,000. I'm going to pay for half of those in August, so I multiply by 50%. And if I pay in August, I get a discount of 2%, so I'm only paying 98%. And then the other 50% without the discount is paid in September. And that's the same for each other month. In August, purchases I pay in September, October. Again, I get the discount in September, no discount in October. And for the same reasons, these are all filled in. I'm not going to pay anything from May or June because the company wasn't set up. And here in August, I'm not going to pay anything from June. Company doesn't plan to be set up, but I will have to pay something from July. So as we said, July, we're going to pay 1 month later in August. So that is going to be 107,800. And the other half without the discount is September. August, I'm going to pay in September and October. September's purchases I'm going to pay for in October and November. October's purchases I'm going to pay for in November and December. And November's purchases I'm going to pay for in December, and the other half will be in January, but we don't have to do January. So now I'm just going to total these across. So that will give me the purchases 1 month. The next thing we have to do are wages. So in the question it says wages are just 50,000 per month payable as incurred. So they're just simply 50,000 each month. And I will total those across. Variable overhead is €10 per unit. Okay, now it doesn't tell us the units up here, so we need to work out the units, and then we just multiply by 10. How do we work out the units? Well, it tells us the selling price per unit is €50. So in July, for instance, if sales are 520,000, that's the total sales, and each unit is €50. If we divide 520 by 50, it'll give me the units and multiply it by 10. And again, so you can see here, so it's just 520 by 50 by 10. In August, the sales were 540,000. And again, the selling price was always €50. So divide that by 50, multiply by 10, and so on. So it's simply just a matter of getting the sales, dividing it by the selling price per unit, gives you the units, and then multiply it by 10. So that is July, August, September, October, November, and December. And they are all payable as incurred, meaning it goes, the expense goes in, or the cash payment goes in the month that it incurred. Fixed overheads is the next thing we have to work out. So fixed overheads, in the question it says fixed overheads including depreciation 60,000 per month payable as incurred. There's a reason including depreciation is in brackets, because you have to take it out of fixed overheads, because depreciation is a non-cash item. So we need to work it out and take it away from the fixed overhead each month. What do we depreciate? We depreciate fixed assets. The asset here that we purchased was equipment, so that was 54,000. It has a useful life of 5 years, which is 60 months. We need to work it out on a monthly basis because we're doing our cash flow on a monthly basis. So to work out the depreciation each month, it's simply 54,000 divided by 60 months, because there's 60 months in 5 years. So again, I'll just to show that working, depreciation is 54,000 divided by 60, which is €900 per month. So the fixed overheads, instead of being 60,000, would be 60 less than 900, which is 59,100. And again, they are fixed, so they're going to be the same each month. Equipment, very straightforward. Equipment was bought for 54,000 and it was purchased on the 1st of July. So again, that's going to be 54,000. There's no more equipment purchased, so they will be all zero. And again, that totals 54,000. Now, the loan. So to buy the equipment, we got a loan. It says this will be financed by a loan of 48,000 at 6%. So that's the rate of interest, at 6% per annum per year. The capital sum, which is the actual loan itself, is to be repaid in 24 installments commencing in August. We're starting paying back the loan in August, not July. It's paid back in 24 installments, so if it's 48,000, paid back in 24 installments, each installment will be 2,000. The interest for each month is to be paid in the last day of the month based on the amount of the loan outstanding at that date. What that means is that as the loan goes down, if you start paying back off the loan's going to go down. And if the interest is based on the amount of the loan, as the loan goes down, the interest will also go down. So just have a look at the workings for that. The loan installment, the installment is straightforward enough. The loan is 48,000. It's paying back over 24 months, which is €2,000 per month, but we don't start paying it back until August. So it'll be nothing in July, 2,000, and then, so that'll be just 2,000. For the rest of the months, and that comes to 10,000. Then the loan interest. So we need to be just careful of the workings for this. So the loan interest. So in July, the loan was 48,000. The interest per annum was 6%, meaning per year. So on a monthly basis, we need to multiply it by 1 over 12, 240,000. Then in July, we paid back, that was in July. So in August, we paid back $2,000 of the loan. You can see here, in August, we paid back $2,000. So the loan was down to 46,000. So I just get 6% of 46,000 by 1 over 12. Then again, the next month we paid off another 2,000, so it's down to 44, down to 42, down to 40 and 38 and so on. So the first month it is 240, and you can kind of see a pattern here. It's going down by 10 each month. The next 230. 220. 210, 200, and 190. So I just need to total those. So now I just have to add my payments. So first month 267,340, and I'm just going to do that the whole way across. Just going to add them down for each month and the total. So for the 6 months, the total payments that we plan in our budget are 261,690. So now I need to work out the net cash just to see if we're up or down each month. To do that, I simply get my receipts each month. So in the first month of July, it was 197,600. I take away my payments, 267,340. So in the first month, I think I'm going to be down 69,740. That's what I budget. The second month, up 34, up 88, up 94, and so on. And in total, I think for the 6 months, I'm going to be up 323,810. I got a bank loan here in July of 48,000, so that has to go in. Although it's a bank loan, you might think it's bad, a negative figure, but we actually, because of the loan, we have 48,000 more cash to spend, so that goes in as a plus 48,000. We didn't get in any more loans, so they are going to come to 48,000. My opening balance, as we said already at the top of the question, this company is only being set up at the start of July. Up here, they plan to open a new store. So if that's the case, there'll be no opening balance. And whatever goes in the first column is the same figure that goes in the total column. If it was 10,000 here, it would be 10,000 in the total, but it's not at zero. So it's zero in both places. And now I simply add these down. So I plan to be down 69,740 in July, but I have a loan of 48, so I'm down 21,740. Then my closing balance in July is going to be my opening balance in August. And again, I just add those down. My closing balance this month, opening balance from the previous month again. Sorry. So my opening balance here is my closing balance there. Add these down. My opening here is my closing here. Add these down. Again, opening this month, my closing from the previous month. Total them. So that comes to 371810. Now this 371810 does not go here because that's not the next month, it's the total column, and there's also a figure in there of 0. So now I just add down these three figures, the 323810, the 48 and 0, and they come to 371810, and these two figures in yellow are the same, which means it is correct or it balances. Now I'm just going to change this so it's easier to see. So now, the budgeted profit and loss account. So the first thing that's going to go in here is the sales figure. And if you go back to the question, it actually totals the sales figure for us for the 6 months. If it didn't, we just add up those 6 figures, but it does. It's 3.6 million. So it's just 3600. Now I have to take away my cost of sales. So my cost of sales, first thing it's going to go here are purchases, which is 1750000. Again, that's total first. Again, I'm not taking the receipts or the payments figures from above from the cash budget, because what goes in the P&L is what we actually sold or actually purchased, not the money we got in for sales or the money we paid out for purchases. So they will not be the same as the cash budget above. The wages, variable overhead and fixed overhead, they can be taken from the cash budget because they are all payable as incurred. So that meaning that the expense was the month that it incurred. So they can come from the cash budget, wages, variable overhead, and fixed overhead, all just coming from the cash budget. Equipment will not go here because equipment is not an expense, it is a fixed asset, so it doesn't go in a profit and loss account. So I'm going to total down these cost of sales, and they come to 3124600. So my sales less cost of sales gives me with a gross profit of 475,400. Now I have to take away some more expenses. So the depreciation of equipment, which we worked out already, remember we took away the €900 from the fixed overhead, that didn't go in the cash budget because depreciation is a non-cash item, but it is an expense. So it's just 900 by 6 because this profit and loss account is for 6 months. A discount allowed, if we allow a discount to somebody, it's bad, it's an expense to us. Now, who do we allow a discount to? We allowed a discount to people who paid us by cash. So if our total sales were 3.6 million and 40% of them are for cash, and we gave a discount of 5%, then to work that out, it's just the total sales, 3.6 million by 40%, because 40% are for cash, by 5%, which is a discount we gave, 72,000. So my total expenses come to, and again, these don't go on cost of sales because they're not directly related to the sales, but they are an expense. So my gross profit less expenses come to 398,000. I received a discount, which is good, okay, so I'm going to add that back. Now, the discount I received was on purchases that I paid for a month later. So again, I'm going to take my total purchases, but I have to take away my December purchases because I wouldn't have got that until January, the discount of that until January. So with the sales, you take total sales, but with the purchases, you take the total purchases, but you have to take away the December purchases. So total purchases minus December purchases, and we got a discount on the ones we paid a month later, okay? A month later, 50% of them were paid a month later, and the discount is 2%. So it's by 50% by 2%. So I'm just getting my total purchases, 1750000 minus the December, and then multiplying that by 50% because I got a discount if I paid a month later, 50% of them were a month later, and the discount I got was 2%. And again, that comes to 13,700 because there's no other income there. So 398 plus the 13,700 comes to 411,700. And now I simply need to just take away my loan interest, which I get from my cash budget, not the installment. That's not a profit and loss expense, not included profit and loss, just the interest is the expense, the 1290. And again, that obviously reduces my profit, so I'm going to take that away, which leaves me a net profit of 410,410. And then the last thing on the question is, what factors should be taken into account by DIN Limited in arriving at the expected sales of 3.6 million? So what should I do to try and arrive at the expected sales? So they should check last year's sales from other stores, because they weren't set up last year, but you can have a look at other company stores' sales from last year. Do a bit of market research, get the opinion of sales manager or sales reps on the ground. They might have a good idea. Look at trends or the state of the economy. Economy good, sales higher. Economy bad, sales lower. The price to be charged or the selling price, that would have an effect on the quantity sold. What the competition is, and if they're luxury items versus necessities. So that's the 2012 Leaving Cert higher level cash budget question complete. If you like and subscribe to the YouTube channel, there's lots more videos there. Thank you.